All right. Again, this is Hope Atwell. Good morning, everyone. I am the Executive Director for the Asian Real Estate Association of America. It's great to host this end of the year webinar to take a look at what's going on with our community, with the AAPI community. And we certainly are privileged to have our partners with us this morning. If it wasn't for their partnership, the production, the development, and the circulation of the State of Asia America report would not be possible. So joining us this morning is Mike Reagan, Cindy, and Sam. So just kind of like some housekeeping items before we get started. We have a few presentations that will be made available as a PowerPoint presentation. We are recording the webinar, so we will be sending out an email for those of you who would be interested in either pushing out the webinar to your network or listening to the webinar again. All of the PowerPoint presentations will also be made available to the attendees. So just making sure that everybody on the call is aware of that. We are also going to take questions after the last presentation, after Cindy Waldron's presentation. So if you can please hold off on your questions after that, then that way we give ample time for all of the speakers. So again, thank you for joining us. Just a little bit of history about the State of Asia America report. We started producing this particular report in 2016 when ARIA embarked on a No Other campaign. We thought that it would be terrific to put all of really important demographics about what's going on with our community, particularly in housing, in one booklet and share that with our members and our partners and all of our constituents. And since then, we've had great partners like REMAX and Freddie Mac who has helped underwrite this program. And again, we're very, very grateful for the partnership. So our first speaker this morning is Mike Reagan. Mike is a great friend based in Denver. Mike Reagan leads the global development for REMAX. I know a lot of our members and I'm sure our attendees this morning come from REMAX. And Mike handles the franchise operations in more than 110 countries and territories outside of the US, including Western Canada region. Mike also leads the REMAX collection, which is the luxury collection serving the affluent buyers and sellers from around the world. He also wears the commercial hat for REMAX, and under his direction, REMAX Commercial has grown into one of the top 15 commercial brokerages network around the world. If Mike is not busy with all of that, he also manages REMAX's relief efforts, the industry partnership focus on inclusion and diversity in real estate. And Mike is committed to the local communities through the 27 partnership between REMAX and the Children's Miracle Network hospitals. And so without further ado, Mike, I am turning it over to you.
Hope, and thank you very much, and welcome everyone. It's an honor to be with this distinguished panel and our good friends from Freddie Mac. But anytime we get to promote the State of Asia report, it's a huge opportunity for all of us. So we've got just a couple minutes here and a couple things to share. So go ahead and get started. As a global network with presence in more than 110 countries and territories, REMAX understands and respects the cultural differences of diverse communities. We're proud to be associated with ARIA and also proud to present, along with Freddie Mac, the State of Asia America report. Real estate professionals in all aspects of our industry will benefit from this report's data and insights. A few areas of particular note in this report: the number of AAPI homebuyers continues to increase. The number of AAPI women business owners continues to grow, and these entrepreneurs now lead more than 750,000 different businesses. So huge opportunities, I think, especially in real estate. The average age among AAPI is 36 years old, and that's great for all of us because they're right in the prime home buying years. And As noted in a new section of the report this year, the Canadian Asians are now the largest and fastest growing minority segment in Canada. As sponsors of this report, we encourage our audience to use it as a catalyst to learn what's happening in your individual markets. We hope you become involved with your local AREAA chapter and participate in the impact of the AAPI community. You know, all of us are experiencing incredible change in the real estate industry. It's an exciting time for all of us. To me, the most exciting part is how real estate professionals have become so focused on listening to their customers and exceeding their expectations. You know, the theme that we see throughout our network and with a lot of our friends is it's all about the experience you deliver. Consumers have a lot on their plate, a lot of options, but it's really about the quality of the experience you deliver to the consumers. RE/MAX agents understand how important it is to be knowledgeable of all options available to families and to serve as a trusted ally to guide them through this very complex transaction toward the dream of home ownership. Just a couple quick comments from the recent RE/MAX housing report that we put out nationally. You know, some good news that October sales finished 3.9% higher than October of 2018. So good news for everyone. And October became the fourth month out of the past 6 to post a year-over-year increase in sales. And so it's, you know, a lot of great things happening still in the marketplace. The median sales price in October was $254,000. But I think the one theme, and we're seeing this both in commercial, I'll comment in a second, but in residential, is the creativity, not only in builders, but developers, but communities coming together. You know, we certainly, all of us are focused on affordable housing, but there was an article in Wall Street Journal today in Tempe, Arizona. They're building the first car-free community to really test the demand of walkable living. It's 1,000 residents. You're not allowed to have a vehicle on the entire in the development. So I think we're going to see more of these lifestyle centers develop, you know, throughout the country. On the global front, it's an exciting time to be part of an organization so involved in real estate around the world. At the recent Global Exchange in Boston, we discussed the impact of the Brexit decision in the UK, the shift in foreign investment to markets with more favorable golden visa programs, Portugal, Greece, a couple examples. We also talked about new markets that are attracting foreign buyers, a lot of foreign investment in Central and South America right now, but also the impact of technology on the consumers. And, you know, we think that we're ahead of the curve here in the U.S., but quite honestly, in a lot of markets around the world, there's some pretty exciting things going on in the technology arena. As AREAA continues to grow in membership, markets, and voice, we're excited to be part of the results. Everyone benefits from increased language access, alternative credit systems, and better representation for this expanding market that will help drive our economy forward. The RE/MAX partnership with AREAA is tremendously valuable, and RE/MAX agents will do all they can to increase home ownership rates in the community. Just a couple observations on commercial, and this has been consistent throughout the year. I think all of us that travel a lot, everywhere you go, you see new developments in multifamily category. It seems like it's just the building is out of control right now, but huge investment in multifamily because, as we all know, the number of renters are up and the rents continue. Retail, I think, still is slipping because online sales are increasing. And I think the last numbers I saw is we're getting close to 12% of all online sales, or all retail sales are online now. But a fun area of commercial, which is very getting back to the creative approach, is transitional space. What we think of as typical shopping centers are becoming infotainment districts or lifestyle centers. We've seen big developments on the lakefront in Cleveland, a St. Louis ballpark district. That's also happening in Denver. So a lot of opportunities to bring new businesses into these lifestyle centers. And of course, when we went to the White House with AREAA back in the spring, you know, the conversation was all about affordable housing, working together in this coopetition kind of a marketplace, but also about the 8,700 opportunity zones. And that, I think, as more education becomes available, provides a huge opportunity for our market. So on behalf of RE/MAX, we're great to be an ARIA partner. We're very proud of that. And we'll turn it over to the next speaker, and we appreciate being with you today. Thank you.
Thanks, Mike. Appreciate that. Interesting about Tempe, Arizona. I think the last time I was in a community without cars was at Mackinac Island in Michigan. So I'd be interested to hear more about the no cars community. I think actually that would be cool. So anyway, transitioning to—
Yep, it was in the Wall Street Journal this morning.
Yeah, I'll have to take a look at that. So thank you for sharing those interesting facts. And, again, Mike shows up at a lot of our events, and you talk about our policy summit in DC, where we had great meetings and was present, and Mike was present in a lot of those meetings. So, Mike, thank you for the support. Thank you for the partnership, and thank you for being present at those important meetings. So transitioning to our next partner, Freddie Mac, and actually introducing Sam Luna, and Sam will be introducing our next speaker, Cindy. Just a little bit of background about Freddie Mac. Freddie Mac actually was our first partner, our first supporter 16, 17 years ago, back in the days when Jim Park was associated and was a lobbyist at Freddie Mac in his early days. And so Jim believed in the mission of ARIA, wrote the first sponsorship check, and similarly funded a study. Back then, it was a joint study with the UCLA Asian Studies, and put together, a research project about API and home ownership. And because of that, ARIA has grown in the last 17 years. And so we thank you for really the partnership that propelled ARIA into what it is now. And so Sam has been a great supporter and friend of ARIA. Sam is the Senior Director of Single Family Affordable Lending at Freddie Mac. He leads the lender engagement team for the Affordable Lending and Access to Credit Division. Sam's team also drives affordable loan production with Freddie Mac's lender customers. And prior to his position at Freddie, Sam was managing partner at Civic Center Home Loans, and where he headed up the mortgage and real estate firm in LA. He was also responsible for mortgage lending, business strategy, and strategic partnerships. Sam is also a licensed real estate broker and a former loan originator in his previous life. Sam has over 25 years of housing and mortgage experience, and he is nationally recognized as an effective leader and advocate for increasing access to credit and responsible lending. So Sam, turning it over to you.
Thank you so much, Hope. Can you hear me okay?
Yes.
Okay, great. Well, thank you, everybody. It is great to be on this call. And just a side note, it's true. I worked with Jim Park all those years ago at the very beginning when ARIA was just started. I think Jim was about 17 and I was 16, and we were working together at Freddie Mac back then. So it is great to be with everyone this morning. Freddie Mac is longstanding partner and supporter for ARIA. We partner with all of the members of the housing ecosystem. That's lenders and loan officers, real estate professionals, housing finance agencies, housing counselors, and also just your community organizations that are out there trying to help as many families as they can. At the end of the day, we're trying to help families get into home ownership so they can secure their financial future and enjoy all the benefits that brings. ARIA has been a terrific partner of ours for many, many years, and we support not only the study, but being present out there with them in markets, both at the national conferences, at regional events. I've had the pleasure of being on panels there with Mike and others Mike from Remax, who's such a great leader in this market. Just special shout out to you, and thanking you for your leadership. I would say that one of the things we've done recently is create a new awareness campaign called All for Home, where we really kind of categorize the 4 key areas that we're focused on in our affordable group. And number 1 is insights. We're going to get some of that today from Cindy Waldron coming up. And, we bring those insights and our market research and key insights to actionable items to the market, to our professional partners, so they can do more in their communities. Education. My small team at Freddie Mac will probably educate about 50,000 industry professionals this year when it's all said and done. And then mortgage products. We're focused on low down payment options for low income borrowers, for first time home buyers, products that work really well with down payment assistance and so forth. So mortgage products is another key part of what we do for the market. And then finally, business solutions. Working to support our lender clients, we are focused on technology and solutions that can help them lower the cost of originating mortgages and bring those savings right down to the consumer level. So it's really those 4 areas that we're focused on. Today, Cindy Waldron is going to be presenting. I think in bringing her on, I just want to say Cindy leads a world-class team as part of our affordable group. This is in addition to the office of our chief economist that takes a look at the broader economy and the housing market as a whole. Cindy's team digs deep into a lot of the housing information, HMDA data and so forth, and develop actionable key insights for our professional partners across the country. So without further ado, I'd like to introduce Cindy Waldron, who's going to be presenting the key presentation today.
Thanks, Sam. Can you guys hear me too?
Yes.
Great. So thank you so much for the introduction, Sam, and thank you to Hope and to Arya. And I'm thrilled to be here to celebrate the State of Asia, another report. I encourage everyone to read it, and also for Mike and Remax for supporting the State of Asia report also. And it's always nice to be on a panel and working with Mike again too. So today, in partnership with the State of Asia report, I also have some insights that I wanted to share with you guys. And so today I'm really going to do kind of a high level look at just home ownership and growth patterns that I'm seeing, and in particular in the AAPI Asian community. HMDA just recently came out this fall, and so I'm going to give you some highlights there. And then I also like to think about what is the pipeline, who are the mortgage ready, who are the real estate agents going to be targeting to get into home ownership. And so I'm going to talk a little bit about that. And what's interesting on that is one of the things that, as Sam said, I look at a deep dive, but I'm also really interested in what are the barriers to home ownership. And I think the down payment is one of the biggest. And so we really did a lot of research on how long it takes to stay within different areas, and even for the Asian or the AAPI community. And lastly, I wanted to give a status update on the Language Translation Clearinghouse. So with that, let's look at the first home ownership slide. So as you can see, I'm going to take mine because I can. So I actually have on mine, I don't know if everybody else does, where it's on the top, I have a, can everybody see it? Oh, yes, perfect. So how to read this slide is the home ownership rate is the dark blue or black line. And so the good news here is that you see in the last 3 years, you see the home ownership overall is increasing. And how do you read the bar lines are really looking at if the home ownership went up were down for the year. And not too surprising, during the Great Recession, you see the home ownership rates, that's where you see the bars going down. And in 2016, we started to get the gain, and quite a bit of momentum in 2017 and 2018. So now let's look at the next slide, where we can do a deeper dive into sort of the minority homeownership rates and how that's driving the homeownership overall. So the dark green line is the Asian homeownership rate as a timeline between 2000 and 2018. And again, great news from 2016, 2017, and 18. So they are definitely driving that overall homeownership rate. You also see Hispanics are driving it, and then unfortunately African Americans had a dip in homeownership rate from 2017 to 2018. But all in, the all minority is the gray, and we are seeing that minorities are driving the homeownership rate overall. So the next slide is, well, what's driving that rate? And how to look at the first bar graph is really looking at the homeownership rates in the last 2-3 years. Is that's the all-day homeownership, and then you see the first-time home buyers, and you see it by race, ethnicity. And so you see the Asian is the gray, and so you see disproportionately that population is first-time home buyers. So that's what's really driving the homeownership rate overall, and in particular for Asians. So the next slide, I wanted to look at, well, where is the biggest concentration that we see for Asians, and then how is that the population growth within those different MSAs. So I apologize, I get that this slide is very busy, but I'm going to give you the so what of the slide. So if you go on the left, on the very top, you see it's ranked, ordered by MSAs with the highest concentration. So not too surprising, you see like the top 7 are from California and Hawaii. And so that's where we're seeing in 2018 where the highest concentration is. And then on the left, or on the right, apologies, is those MSAs in trend lines. And so to see like how is the growth happening within each of those MSAs. So let's go to the first one, the top left you see is Ames, Iowa. So how to read that is, and then you see if you go all the way down to the bottom, you see that it's by year. So the first, that 19% is really from 1995, in the last 5 years, before 1995, the average change in homeowner in concentration was 19%. And then you see the trend lines going through the Great Recession, and then you see it actually going up quite a bit, and from like 2012, probably about 2012, 13 to 2015, and then a little bit lower. So in 2019, the last 5 years of concentration for Asian in Ames, Iowa is 24%. So what you're seeing with the different trends is, well, we're still seeing a lot on the east and the west coast. You are seeing, even though 24 is a little bit lower in the dip, when you look at all the different MSAs, it's actually quite a bit higher than some of the other MSAs. So that's actually an area that we're seeing growth in the API community. One of the things you're seeing is in Hawaii. If you go down to the bottom row, the second one, Honolulu, you see that it's actually a decrease in population there. So that's kind of giving you a little sense of where the migration is happening within the AAPI community. And then the next thing I wanted to show you is Hamza was out, and so it's always kind of interesting to see the overall market, what's going on. So the next slide you'll see is what happened from the 2017 to 2018. So yes, page 9. So what you see here, the first going across is the conforming market. You see that actually minorities declined a little bit. and the Asian community was 0.3 higher. So let's dive deep into what happened there. So where you see by loan disposition, that's saying in the conventional market, where do we see, where do the loans end up? And you see for the minority from 2017, and then you go to minority 2018, you see a little bit where it's not too much difference between the two. You see a little bit in the retain actually is where it went down in the minority overall. But if you see the bolder black where the conventional is, you see that actually minorities in the conventional market actually stayed the same, 23.9 for 2017 and 23.9 in 2018. The Asian community also stayed flat for that. So where we're seeing the difference is FHA. So you see there was actually an increase in FHFA for overall minorities and a little bit for Asian. So when you're seeing the conforming market, the increase really came from predominantly the FHA is driving that increase for the conforming market, not the conventional conforming. All right, so the next slide you see on page 10 is a heat map of where all of the loans from the 2018 HMDA for the API community, where they originated. So how this works is it's a heat map, and so the darker the blue, the more the loan volume that you will see. So not too surprising, again, pretty consistent what we've seen in the last few years as the West Coast has a pretty high concentration, and then the Northeast component. But what you're also starting to see are some pockets in the Midwest. I don't have a pointer, but for geographic wise, I'll kind of point out and mention some of them. You'll see like you see Denver and Utah, you see Minneapolis, you see Madison, Wisconsin, you see kind of the Chicago area. In Michigan, you see Detroit, and you see Indiana, you see Ohio, Atlanta. So what you're seeing are some pockets in the Midwest where you're seeing the Asian community purchasing. And so this is going into a little bit of more migration into where there's some more affordable housing stocks. So the next page, what I wanted to show you guys was where a lot of these loans originating that we see in HMDA. And so where we're seeing is it's mainly some of the larger lenders. So on the top, you see it's the top lender is Wells, then by Chase, United Shore, Quicken, B of A, and then we go to Caliber, Loan Depot, and down the line. So again, kind of the trend, very similar to last year, is that the larger banks are originating in the Asian community predominantly. So next thing I wanted to look at was opportunity. So we'll go kind of 2 slides where we looked at page 13. And what I've done here is I've acquired a data set, and we've just recently updated to say we're all looking at all credit visible. So if it's in one of our a repository, a credit repository, if an individual has a record there, and then we look at a random sample of all those with a record, and we put them into 2 different categories where we call them mortgage ready. And so that's kind of what I'm looking at, is it more of a marketing pipeline to say who will be our next homeowners and who are the most likely to fit into that category. So we don't have an indicator to see if they have a home and it's paid for. And so we took those individuals that are greater than 45. And then we said, are their FICOs greater than 620, their debt to income less than or equal to 25? This could be varied because they typically don't have a mortgage, and so it doesn't matter as much if it's even higher. Then we look at if they have foreclosures or bankruptcies in the last 84 months and severe delinquencies. And so then we put them in there, and then the rest we put into this mortgage weak category. But today I'm just focusing on the pipeline for mortgage ready. So let's go to the next page and define what that actually means. So if we look at the mortgage ready, and that's the middle row, and so you see that overall that means 37 million, and about 32% are what we are calling in this academic mortgage ready. And for the Asian community, what I wanted to highlight in the red circle is that disproportionately we have a higher percentage who are mortgage ready in this community, which is 53%. So there's a lot of opportunity there. So where do they live? Let's go to the next page, which is a slide of a heat map. And so again, not too surprisingly, where the AAPI community lives, so does sort of because 53 we put as mortgage ready. So this is a heat map of where the mortgage ready API community lives. So the next thing we wanted to do is if where they live and they're mortgage ready, are they living in areas that they can afford? And so this is a pretty high level kind of what we decided was mortgage ready. How we defined it was their quarterly gross income greater than or equal to the mortgage amount they would pay for 1 year. And we made some basic assumptions, 10% down, 4% interest, and 30-year. If we did a 3%, this really doesn't change too much. And that kind of tells us a lot of the challenges or the barriers to home ownership is really in the down payment. From a 10% to a 3% down is more the barrier. So we looked at the average house price for a single family or condo using Freddie Mac's home value estimator to determine the median house price. So what I think this tells you is that, again, not too surprising, is that even if you're mortgage ready, if you're on sort of the West Coast, that's going to be a challenge, and even in the Northeast. And I think this is why we're seeing some of those migration patterns going a little bit more into the Midwest, particularly like we've seen some in Texas and, and Michigan, Wisconsin, Iowa area. So the next thing I wanted to show you on page 17 is if you are mortgage ready and you can afford it, what is the housing stock? And so this was updated in September. It's on a quarterly basis that we update this. And so how to read this is that we take from Redfin data, we take inventories divided by sales. And if that ratio is 6 or greater, it means there's adequate housing stock. If it's 4 to 6, it's, fairly good, but not, we would like to see more. But if it's like a yellow or even that light orange, there's not enough adequate housing stock. So the good news I've been seeing is that there is a little bit more of the darker orange that we've been seeing. When we first started doing this about 2 years ago, there was not as many. So I think there's more opportunities, and even in particular in that Northeast, even though it's not as affordable, we are seeing a little more housing stock. So the next thing is what we really saw as one of the challenges is not necessarily even if they're mortgage ready, if they're living in an area. All of those kind of matter. But the down payment is really one of these access to credit barriers that we're really focusing on recently. And Sam mentioned too about our products. And this is why I think it's so important to have our Home Possible and Home One product. Home Possible is our for the low income, the LMI, and Home One, if there's no restriction on income. And so those products, you only need 3% down. So what this graph is, like the so what of this is, we did this by race, ethnicity. And so the time to save is really putting in a calculation of the average personal savings rate based on the Bureau of Economic Analysis was 6.7 of net income. And so this is looking at if they did that, how long would it take them to save? And so if you thought you had to have 20% down, if you look at the Asian community, that is 23.5%. 5 years. That is very daunting. And so that's why it's so important to go out there and educate them, and even as realtors, to let them know about the products. So even if you go down to 5%, that's 5.9 years, but all the way down to 3% down, it's 3.5. This is assuming they have no money at all and they're starting from scratch. I've been asked many times if they're like, why is Asian 3.5 versus African American is only 2.3 and non-Hispanic whites is 2.2. So this is based on the individual income based on where they live. And where they live is the median house price of where they live. So the other thing to note is the median house price for Asians is $428,789. So Asians tend to live in high-cost areas, which is one of the barriers to home ownership for them. It's actually reducing the, it's actually increasing the home ownership gap because of where they live geographically. So now that we had it kind of in the aggregate, I wanted to show you geographically what does that mean for time to save. And so on page 19, this is again a map, heat map, but it's not in the same color. So I liked it because it pops out. So the red means for a 3% down payment, it takes more than 5 years. And so this is what these areas are really driving up the time to save. And so not too surprising where they're located in the high cost areas, right? And the orange is 3 to 5 years. But sort of the good news that I want to take away from this when you look at geographically, the yellow is 2 to 3 years. There is quite a bit of yellow, but even more so, there's a lot of areas that are only 1 to 2 years and less than a year to save. So this to me, map is really a good feel good of like, hey, it's actually obtainable. And this is, here's kind of the goal to get you to the down payment. And the next slide, this is all in. And then we took, we did the same heat map, but only look at AAPI as a subset. And so it doesn't look too dissimilar from the overall. You will see a little bit more reds and orange and yellow in some of these different high-cost areas. Again, the West is gotten a little bit more challenging for the AAPI community. But again, you're seeing a lot of different areas within the country that is like that 2 years or less for saving. Finally, language translation clearinghouse updates. So if we go to page 22, again, I put the website down there, fhfa.org/mortgage translation. This is a combined effort with Freddie, Fannie, and through our regulator, FHFA, to translate mortgage documents and glossaries into, there's 5 different languages. Spanish and Chinese have already been completed. Korean and Vietnamese will be available in 2020 and Tagalog in 2021. So I thank you for the time to give you some of the insights, and I will open it up to Hope or to see if there's any questions or from the audience.
Yeah, thanks, Cindy. I know that there are some questions that's in the queue. So Vanessa, did you want to read? Hang on 1 second. And I am.
There was a question about a specific slide. I think it was the housing stock. Does the white area mean that there's no data available for housing stock?
Yes, it's typically in the high. It's in the little larger MSAs, and so if there's not enough volume, we don't show those MSAs. So I apologize on that. Yep.
Great. We have a question from Mike. Do you think our foreign investors on the global front are ready for the new concept of car-free communities? If yes, what areas can you see this come to fruition?
I'd say ready, yes. It's probably going to be a slower process, but if you look at, we heard this comment made in Washington. In America, we build out. In a lot of foreign markets, they build up. So I think one of the dynamics that has to change in our country is creating these affordable living centers or, car-less communities closer to where people work. A lot of young people, young buyers today are getting pushed farther and farther from the workplace. We're seeing it here in Colorado and a lot of markets. So I think that it'll be interesting to watch this sort of idea in Tempe and see, because it's probably going to pop up around the country.
Great. Any other questions? Feel free to enter them into the chat.
Hey, Vanessa, this is Hope. I actually have a question for Cindy regarding just the FHA loan. Now, traditionally, and you probably have seen this year after year, Asian Americans tend to shy away from FHA loans. And whether there's a stigma associated with it, but there's, as I think you've pointed out in one of the slides, because we live in high-priced communities, that's a barrier for homeownership, right? Because it takes us a longer time to obviously save up for a down payment. And so I think my question is, what is Freddie doing to, one, dispel the myth that we need to have 20% down payment, because you do have a lot of programs that you have out there for as little as like 3%, probably no PMI. What educational opportunities are you doing to reach out to not just a realtor audience, but I guess to just let everybody know that we don't have to save up that 20%?
Yeah, I'm going to start this conversation, and then I'm going to pass it over to Sam, who is really the person making the difference into the education and awareness. But I will say it was interesting to me to see the Asian community in the FHA go up from 2017 to 2018, and like you typically do see better credit scores, which is so often like it is a better route to go conventional conforming. And we do have these two products, one Home Possible, which is our income where it's a low income, but you only need 3% down. We saw a need for not just a low income, because there's a lot of people in high cost areas, and it's a challenge to save. And so we have Home One, and there's no income restrictions for that, and that's also 3% down. And so, Sam, I'm going to tag team for you to see if there's things that you want to highlight, because I know your team does a tremendous amount to educate within the industry.
Thank you, Cindy. Yeah, and Hope, it's what I said at the beginning. Our small team of about 15 folks within the affordable team at Freddie Mac will educate close to 50,000 real estate professionals and loan officers this year. And really, we're educating them about our products and tools and resources available to support them. And a key part of that is educating them on the low down payment options that we have, conventional options versus FHA, and reminding them that private mortgage insurance that goes along with a low down payment conventional mortgage is cancelable rather than for the lifetime of the loan. It can be a lot cheaper, especially in the higher FICO scores. So it's really that education that we are focused on, and it's education. It takes a lot of different forms. Webinars like this, large national conferences, smaller, regional type of conferences, or sitting across the table from 10 loan officers in a shop, or hitting a real estate office and having a lunch and learn. We're doing all of those things across the country with our customers and with our partners, and bringing that education right down to the point of sale. That's the key, and it is making a difference out there.
Great.
Great.
Thank you, Sam.
I think we have
A
time.
couple, yeah, it looks
Two
like
more
we have a
questions.
couple other questions that we have time for. We are reaching, we're about a minute past, but we can probably accommodate if Mike, Cindy, and Sam, you're okay. This question is asking about translated materials. The question is there possibly already any translated material out there explaining the home purchase process?
I haven't dove deep into the Mortgage Translation Clearinghouse, but there are the different glossaries and the documents, and I think there is a lot of training material. So I believe that that is a great resource. Currently, like I said, it's Spanish and Chinese, but that should have, I'm not sure if it's like the whole process, but it does give you, I think it's going to give a pretty holistic view of, how do you fill out these documents? What are these things, what do the terms mean? And really kind of just training on it. So I would say, yes, that's the whole purpose of this Mortgage Translation Clearinghouse.
Great. Thank you, Cindy. And
Just
one
just
last
to it.
question
Hope,
yes, Mike?
Hope, I was going to add real quick, in talking
Yes.
to a lot of our associates that work in language, in particular communities, they really have built sort of a portfolio of support services. So if all of their marketing communication, say, has been in Vietnamese, and then they go to a closing, everything's in English, that's daunting for a family. So the agents I've talked to really build their own portfolio of either translation experts or support, so that the family has a trusted advisor through the process. But we do something with NAREP, which is an English Spanish, Spanish English glossary of real estate terms. So good opportunity there. I think we'll continue to look at that.
Yes, thank you, Mike. And like Mike had said, it really depends on either the brokerage or the mortgage company that you might be working for. They might have some proprietary information that has been translated already. I know in particular, I think for Bank of America, they do have several documents that are translated in, I want to say, like at least 20 languages. So we could probably compile that and put that under resources for ARIA. One last question has to do, Cindy, I think, with one of the slides. The question is, in reference to the buyer-ready heat map and housing stock, has this information been overlaid or contrasted with unemployment and median income information by area? In other words, are there sweet spots where unemployment is low, wage growth is high, affordability still high, and housing stock on the rise?
So those are great questions, and oftentimes I typically say I haven't put in overheated markets, or I haven't looked at some of the macro components, but that is definitely I think we keep building on it, and that is a great suggestion that I think we will take and start working on incorporating, connecting more of the dots into the macro environment there. But we have not done that yet.
Okay, well, something that we can probably look to in future webinars and future data. So thank you. So we are about 5 minutes past our time. Thank you, everyone. Thank you, speakers. Thank you, Mike, Cindy, and Sam for joining us. Just one quick announcement before we conclude the webinar is, again, this is recorded. The PowerPoint presentations will be made available as we push out the actual recording. One reminder is, I know Freddie Mac is hosting their last webinar of the year on December 4th, and we will actually push detailed information to all of you guys who have registered for this particular webinar. Vanessa and Charlie, was there anything else that we wanted to announce?
Nope, we covered it all. Thank you again, everyone. We'll be sending this out. There'll be a recording, and we'll be able to share the slides Cindy presented, so look out for that.
Thanks, everyone. Have a great week and great Thanksgiving. Bye
Thanks,
now.
everyone.